Yeah, hello and welcome to another update video about Aave. Yeah, Aave did make another price extreme here on Thursday. I still count that only as the B wave, even though it did slightly overshoot our resistance area, but you can see that no 4-hour candle closed above the 78.6 retracement level. And if you're familiar with Elliott Wave and if you're familiar with our analysis, then you know that B waves can be slightly longer than you would normally think. Well, you shouldn't really try to put them into a certain target range. B waves basically have no target, but what I put in for a B wave is usually a standard retracement zone. That's all you can do because B waves can overshoot. We know that B waves can also be unusually short, but nevertheless, it's still broadly adhered to the resistance range, which you can see when you take a look at the closed candles. So what I always highlight with B waves, the resistance is valid as long as we have no sustained break. But obviously in this case, had you shorted directly into the resistance area, you would have probably been stopped out. That's exactly the nature of B waves. Nevertheless, it's a valid 3-wave move to the upside. It is a valid B wave, and therefore ideally the C wave has started to the downside now. It's good to see this downside pressure because, well, one more high above yesterday's high, so above the B wave high basically, would mean that we have 5 waves up. And that would mean that the wave 2, circle wave 2, has likely already finished here. I think I mentioned it in yesterday's video. Not my preferred scenario because it would mean that the wave 2 only reached the 38.2 retracement level and also was extremely short time-wise compared to all of this move to the upside in wave 1. Yeah, compared to all of this 5-wave move to the upside. So therefore, I'm watching for lower prices. That's the preferred scenario. It's not entirely clear because obviously we need to break out of this price channel to the downside, but it would be my preferred interpretation of this chart that we're now coming down in the 3rd wave, then a 4th and a 5th wave of wave C of 2. And then I will watch at these fib levels here between $60 and $54 for a potential reversal. The C wave should ideally end below the A wave. If we have a very high B wave as we had it here, we might not have a very long C wave. Okay, that's the problem. Why? Because waves A and C oftentimes have a Fibonacci relationship. So when we have a high B wave, we need to consider the 1-to-1 ratio as a first target. I mean, the 61.8 is really the first target, but it's too short to be a reliable C wave, right? But it is a common target. But more common is the 1-to-1 ratio. So I would at least like to see the price get there, $63. I cannot rule that out, that we will go off from there. But because I normally like to see a wave 2 reach at least the 50% retracement level, my preference would be for the price to get to $60 or 57, which is the 1.618 extension level. That's another very common target for a C wave. It would then be a so-called expanded flat structure. And this is exactly where we also have the 61.8 retracement level and the 1.618 extension. So the golden ratio at its finest there. So we have an overlap of Fibonacci ratios that really matter. And yeah, that's all good. That's also what we want to see. Then you have Fibonacci confluence, and that could be really a target that might act as a magnet for the price. So these are the common places I'm watching for in this yellow box for a potential reaction. But ideally, we have a little bit more distance to travel, obviously, before we form a low. So we'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.